Welcome to our deep dive into the history of financial markets. We're not just talking about, current trends, but going centuries back to see how markets have unfolded across, different eras. We've got research covering everything from wars to technological leaps and how those events have, shaped financial landscapes. It's pretty fascinating stuff.
It is, and what's even more intriguing is how these seemingly distant events can offer real insight into our, present financial world. You might be surprised to discover how many patterns repeat over time.
Right, like who knew that studying medieval merchants could potentially help us understand today's market dynamics?
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
But before we get too far ahead, let's start with the big picture. Our research actually breaks down financial history into 5 major eras, kind of like chapters in a massive book. We've got the financial renaissance kicking things off back in 1252, followed by mercantilism, then free trade, Keynesianism, and finally the globalization era we're all living in right now.
Now, it's important to remember that these eras are defined in hindsight. It's not like investors back then had a crystal ball to see what was coming next. Just imagine trying to predict events like the Napoleonic Wars or World War I. Those were major market shocks.
Absolutely. It makes you realize that uncertainty is a constant in financial markets, no matter what era you're in. But that doesn't mean we can't learn from the past. So let's get into the specifics. Within those 5 major eras, the research actually identifies 24 distinct periods, each with its own quirks and characteristics.
And by examining those individual periods, we can start to see how seemingly unrelated events connect and influence each other. It really helps paint a clearer picture of how we got to where we are today.
Okay, so let's jump in. We could spend hours on each period, but I want to highlight a few that really caught my eye in the research. Let's start with the medieval economy from 1252 to 1348. You wouldn't necessarily think of medieval times as having sophisticated financial systems, right?
Right, but it was surprisingly complex.
Exactly. This period saw the reintroduction of gold coinage in Europe, which standardized trade and facilitated larger transactions. Then you have the rise of these powerful Italian merchant families like the Bardi, Peruzzi, and Alberti.
Think of them as the early multinational corporations. They had branches across Europe, financed kings and wars, and engaged in complex trade deals. Their influence extended far beyond their home city-states.
Wow, it's an incredible detail. It's amazing to think how these families essentially shaped early financial systems. It's like they laid the foundation for international finance as we know it. But then things shifted dramatically during the Great Inflation from 1493 to 1601.
Yes. This period is a prime example of how global events can completely reshape financial landscapes. Remember those Spanish explorers hauling back mountains of silver from the New World? Well, that flood of silver into Europe had a huge impact. It triggered rapid price increases, inflation on a scale they hadn't seen before.
So it wasn't just about discovering new land, it was also about the economic shockwaves that followed. And those shockwaves actually shifted financial power from Italy to the Netherlands, which is another interesting twist.
And speaking of twists, the 30 Years' War, from 1602 to 1648, brought about some major changes too, right?
Absolutely. This period marks the emergence of the first major joint stock companies, like the Dutch and British East India companies. These were enormous enterprises, backed by multiple investors who shared both risk and reward. It was a revolutionary concept at the time.
So instead of a single merchant or family controlling everything, you now had groups of investors pooling their resources. It's like the birth of the modern corporation. This must have had a huge impact on how businesses operated and how capital flowed.
It did. And if we connect this to the bigger picture, we also see the birth of the Amsterdam Stock Exchange in 1602. This was a game changer because it provided a centralized marketplace for buying and selling shares in these joint stock companies. It marked the beginning of readily available financial data, which was essential for making informed investment decisions. It's incredible how events like war can actually spur financial innovation. It's like out of chaos comes opportunity. But then, of course, we fast forward a few centuries, and we arrive at the deglobalization era, starting in 2020. Now, this feels particularly relevant because it seems like we're living through another massive shift.
It's true. The deglobalization era is still unfolding, but it's already challenging many of the assumptions of the previous globalization era. Think about how the pandemic, geopolitical tensions, and supply chain disruptions are prompting a reevaluation of global interconnectedness.
Right. It makes you wonder if we're seeing a return to a more regionalized world with greater emphasis on national interests and potentially even more government intervention in markets.
It's definitely a possibility. And the parallels to the Keynesianism period are striking. Back then, there were restrictions on stocks and bonds aimed at controlling capital flows and stabilizing economies. Could we see similar measures being implemented today? It's a question worth pondering.
Okay, so we've covered a lot of ground already. We started with the medieval economy, explored the impact of the Great Inflation, and witnessed the rise of joint stock companies during the 30 Years' War. Now we're in the midst of the deglobalization era, and it feels like we're at another turning point in financial history. But before we dive deeper into that, I want to take a step back and look at another fascinating pattern revealed in the research.
It's fascinating how history often reviews these underlying patterns. One that really stood out in the research is the cycle of returns. Essentially, it shows that periods of high stock and bond returns tend to be followed by periods of lower returns, almost as if things naturally revert to a mean over time.
Yeah, it's like a pendulum swing, right? Where it swings to one extreme and then inevitably swings back in the other direction. But how does this apply to the deglobalization era? Are we at risk of a downturn after the recent bull market?
That's the million-dollar question. We've definitely seen high stock returns recently, but bond returns have been quite low, even negative in some cases. This could be a sign that the pendulum is starting to swing back in the other direction.
That's something to keep in mind. It really highlights the importance of understanding these long-term cycles. But I'm also wondering, how can all this historical knowledge actually help investors today? I mean, it's interesting to learn about the past, but how do we apply it to our own financial decisions?
That's a great question. Understanding long-term trends and cycles can give investors a valuable perspective, helping them make more informed decisions in today's complex financial world. For example, knowing how wars, technological advancements, political shifts, and even pandemics have influenced markets in the past can provide invaluable context for making decisions in the present.
So it's not just about predicting the future, but about recognizing patterns and understanding how different factors can impact market behavior.
Exactly. It's about developing a more informed and nuanced perspective. It helps you see beyond the daily headlines and connect the dots to larger historical forces. And it underscores the importance of staying adaptable and open to new possibilities because, as we've seen, the financial landscape is constantly evolving.
You know, it's interesting because when you look back at all these eras from the medieval economy to the deglobalization era, one thing that stands out is how interconnected they are. Each era builds upon the innovations and disruptions of the one before it.
Right. And that's why history is such a powerful tool. It reminds us that the financial world is a dynamic system shaped by countless forces, and understanding those forces can help us navigate the complexities of today's markets.
So as we wrap up our journey through financial history, what's the key takeaway you want our listener to walk away with?
I'd say the biggest takeaway is that history doesn't repeat itself exactly, but it often rhymes. By studying the past, we can gain valuable insights into the present and potentially even anticipate future trends. And while we've covered a lot of ground in this deep dive, from the rise of gold coinage in medieval Europe to the emergence of global stock markets, it's just the tip of the iceberg.
It is. We've talked about how history can provide context and potentially highlight patterns, but does this knowledge change how you approach investing today? Given what we've learned, are there any periods in financial history that particularly resonate with you or that you might want to explore further?
It's a great question to consider. Every era offers unique lessons. For me, I find myself drawn to periods of significant disruption, like the transition from mercantilism to free trade or the rise of Keynesianism in response to the Great Depression. Examining how investors navigated those shifts can offer valuable insights for how we might approach the challenges and opportunities of today.
That makes sense. And it reminds me of something you mentioned earlier about history not repeating itself exactly, but often rhyming. So while we can't predict the future based on the past, we can certainly learn from the patterns and trends that emerge over time.
Precisely. And that's why I believe that a deep understanding of financial history is essential for anyone who wants to make informed decisions in today's markets. It equips you with the knowledge and perspective to navigate uncertainty, recognize opportunities, and potentially avoid repeating the mistakes of the past.
Well said. I think we've covered a lot of ground in this deep dive. It's been quite a journey.
It certainly has, and I want to emphasize that this deep dive is just the beginning of your exploration. I encourage you to delve deeper into the specific periods, events, and companies that sparked your interest. Use the research we've discussed as a starting point and see where your own curiosity leads you. You never know what fascinating insights you might uncover.
Absolutely. And remember, the financial world, like history itself, is constantly evolving. By staying curious, informed, and adaptable, you'll be well equipped to navigate whatever challenges and opportunities come your way.
Couldn't have said it better myself. Happy exploring.
Until next time.